Welcome, everybody. Hey, everyone, what's happening? We got everyone, folks are slowly rolling in here. Welcome to Inside Onchain Finance. What works, what doesn't, what's next? Bitwave, RSM, Magic Eden, hosted by Arbitrum Foundation webinar about our favorite thing in the entire world, on-chain finance, crypto accounting, all that kind of stuff. It's funny, like this on-chain finance, we call the webinar that it's such a loaded term. Like, well, we can while we're chit-chatting, waiting for people to arrive here. I don't like on-chain finance. It's super overloaded with like DeFi and everyone else out there. Whereas we obviously all use it for accounting and tax and tracking your financial and treasury management, all that kind of stuff. I don't know. Like Steve? What do you call when someone asks you what you do? What do you say? Do you say accounting for crypto or do you say on-chain finance?
I usually just say I work at a crypto company,
Crypto
and
company.
they
You say
just
yeah,
ask
like,
me, yeah,
and
and,
then the
and
conversation usually ends there.
exactly, yeah, exactly.
How about Aldo? What do you say? Do you do audit for crypto or like account or it's like accounting for crypto?
We're just involved with blockchain and digital assets.
Yeah.
Keep it
It
simple.
does change a lot depending if you're at like a general startup happy hour, you're just like, oh, I do crypto stuff. Whereas if you're in crypto, obviously it gets to be a lot more fun. Well, we'll give everyone a couple minutes to join. We'll probably get started about the 11:02 PST time mark here. I'll just hit. So we'll get into it. Well, welcome everybody. This should be really fun. This is a kind of a fireside chat, to be honest. Like, sometimes we do very deep, very like, hard technical going into T-charts and things like that, webinars. And today we want to just keep it a little bit lighter, a little bit breezier, just a more fun conversation with a couple of practitioners in the space. So this is going to be myself kind of interviewing two experts in on-chain finance, crypto accounting, whatever you want to call it, cryptocurrency companies, and we'll kind of go through it. But there's some really cool stuff happening in the world right now, so it's a fun time to be into it. So we'll get started here. First and foremost, a couple different things here. Thank you so much to the Arbitrum Foundation for sponsoring this. This was accelerated as part of their grants program. So we are doing this with their support, and so we'll try to bring up some Arbitrum examples here as we're going through this. We really appreciate them. Second of all, for those of you joining to get CPEs, your CPEs will be administered to you as a PDF. Registrants who provide an on-chain wallet address can also get a NFT. So this is a really fun one. So if you, we just served the poll. So what will happen is over the course of the next hour, you will see, I believe it's three other polls that basically you have to chime in on in some mechanism in order to get your CPE credit. So please watch for those. I'll try to announce it. This will be a pretty free form kind of fireside chat format, but I will do my best to remember when they come up. But what'll happen is the webinar will basically just pop the poll. So you'll see exactly what you see right now, and you'll get that popped, and you have to fill it out to get your CPE credits. So it should be a lot of fun. All right, on to the main event here. That's it. My name is Pat White. I'm the CEO and co-founder of Bitwave. We are the number one leading digital assets, subledger, finance platform, and now payments. So if you're doing anything around digital asset payments, you want to get AR, AP, facilitate payments, and even facilitate payments to non-crypto companies. We've got a new product all around that. We would love for you to give it a try. So please visit our website and you can find out how to get in touch with us or info@bitwave.io. But I would like to first introduce you to Aldo Barnard, partner and leader of blockchain digital assets at RSM. Aldo, tell us about yourself.
Thank you, Pat, and hi, everyone. Great to be here, and thanks for the initiative. So a little bit about myself. I'm a partner at RSM in Cayman, leading out our blockchain and digital asset initiative across sort of core focus audit, assurance advisory, and then we have a sort of in-house team of DevOps focusing on building our own proprietary tool. Obviously, we spend a lot of time and energy in this sort of ecosystem and sort of participate actively in it, promoting the industry, moving it or being part of moving it forward, making a huge investment, not just in our people, but events like this. So yeah, that's sort of in a nutshell what we do. Don't want to sort of take too much time on this, so we can dive right in and sort of
What I
get.
love about Aldo is a good dude in general, but he has a knowledge of DAOs that is pretty singular. So that's one of the things we're going to be talking about a lot today is how DAOs and the landscape around DAOs and the various regulations around DAOs have evolved over time. It's not something we actually talk about all that much because it's a funny part of the world is that DAOs do accounting, but like it's not always like their main focus. And foundations and DAOs like oftentimes don't actually have a ton of uh things that they're accounting for. So they have like their big war chest, and then they're just doing valuation on it. So it's great. I'm really excited to actually deep dive into some of the regulations and best practices around DAOs with Aldo here. And of course, Stephen Lim is if we were on it, is a longtime friend of the pod, a longtime friend of the webinar here. We love having him on. He's the head of finance at Magic Eden. Stephen, tell us about yourself, bud.
Hey, thanks, Pat. So good to be here and just to chat with Aldo and you here this morning. Hey guys, glad to meet you all. I'm Steven. I'm the head of finance here at Magic Eden. Prior to joining Magic Eden, I've been a Bitwave user, I'd say, since the beginning of 2020, I want to say. I had a chance
Long
to work,
time.
yeah, I
Yeah.
had a chance
Yeah.
to work with Pat during my days at Facebook, or now it's called what's it called now? Meta, right?
Yeah.
During my Meta days, and then was able to work closely with Pat as well during my time at OpenSea. But excited to be here just to talk about all things blockchain accounting, and just happy to just lend any insights that I've been able to accumulate over the past several years.
Now that Meta is like focused on AI, I wonder if they're going to change their name again. Meta or something. That was oh my gosh, so weird.
Yeah,
But it just all right. Well, Stephen, welcome. Yeah, if folks, Stephen was working on this was the Libra project back in the DM Libra. It was Libra that got renamed to DM or vice versa back in the day. So super. I
right.
mean, honestly, that was a long time in crypto years. That was like 45 years ago. So that was like for real. That was like real OG working with David Marcus and all those guys on that side of the house. So that was gosh, we should talk about that. That was super interesting back then because back then it really was Wild West. Like
Yeah.
I make the joke a lot today that like, if you hear a crypto person say that like regulations are unclear or like how like guidance is unclear on how to do accounting, they don't mean guidance is unclear. Like at this point, guidance is incredibly clear. Like you can be 100% compliant with regulations for accounting today for crypto with no problem. What they mean is that they don't like it or they don't agree with it or they wish that they could recognize staking rewards at zero cost basis. Like they take exception with certain things, but it's not about yeah the lack of clarity. But back then, Stephen, I mean, God, there really was a lot of lack of clarity. Like how to do any of this stuff was way out there. So that'd be fun to talk about.
Yeah.
Well, so what I want to start with on this, and I'll just kind of kick it off. So what I want to start off with here is I want to kind of kick it over to Aldo because this is something we don't often talk about in Bitwave webinars. I think it's a really fun topic. Is like, what is the state of the art in DAO finance? And that would be DAO accounting, audit. Where I often so the way I'll couch this by this is um it was probably like you go back a year or two, and I would say it was common knowledge in crypto that like if you were starting a blockchain, you would create a US entity for the tech, you'd create a Cayman entity for the foundation, you'd set up some sort of like, agreement between them in order to like to get around a lot of the US securities laws to be able to issue those tokens and things like that. That was the situation 2 years ago. Um, how has that changed? Where are we today? How do you feel about how everything's shaken out? What the recommended best practices are? Have they changed? Is it still the same? Take us away, man.
Yeah, good question, good topic. But yeah, I would say since 22 on the DAO Foundation side, I would say in terms of the structure and setup, not an awful lot has changed. As you're probably aware, for the last number of years, the ecosystem in general was under heavy scrutiny and attack. So it was really difficult setting up the structures. And to an extent, that played a big advantage for Cayman, especially we have a setup enterprise city or the Cayman Economic Zone, which is really tailored for these types of projects. Easy regulation, and they make it sort of a fast track process to get boots on the ground in terms of work permits and that I won't bore you with. So the structures hasn't, up until now really changed significantly. You oftentimes see your foundation sort of DAO, which is the foundation, the wrapper around the DAO in Cayman. You may have your DevOps team based somewhere in Europe or the Middle East or the US potentially. And then your token issuers you would typically see sort of based out of the BVI and sort of to some extent Panama. I've not seen a lot of that. That said, there's a few states in the US that were sort of, trying to make it sort of more conducive or open for these types of structures. And the immediate ones that comes to mind is Wyoming, that had their sort of DAO LLCs that try to cater for the challenges and the nuances for DAOs. Which is really sort of boiling down to legal existence. That's a challenge. And if you're entityless, given on a number of sort of court rulings to date, you ran into the issue with limitation of liability, because if you're sort of entityless, it could be viewed as a general partnership, and that brings forth potential liability for members or even token holders. So the DAO LLC tried to sort of give some leverage to sort of have a structure that's conducive to these type of setups. You also have the Tennessee DAO LLCs, which are similar to Wyoming, more tailored to sort of privacy, but you require a 50% quorum at all time, and that's not the easiest. Where you look at on-chain voting and governance potentially in a DAO structure, you may not even get to that threshold. And then recently, sort of midway through last year, Wyoming again taking the lead in the states. The legislation was passed for the Wyoming DUNA, as they call it. So the decentralized
I pull it decentralized unincorporated nonprofit
association. That was sort of effective midway through 2024. It's all these acronyms. And that really gives these sort of nonprofit DAOs legal status, which is really critical in the setup. It gives them the liability protection, which is key for people participating in the ecosystem, and really a good sort of vehicle for open source projects. That said, it's only been in existence for a little bit over 6 months, 6 to 9 months. So I don't believe that has gained a lot of traction. But you have large investment managers like Anderson Horowitz, AZ16, that is really sort of pulling their weight behind this, and then sort of thinking that this is sort of a good structure, at least for US-based operations.
Yeah, this was a lot of the inspiration for the question. Was Andreessen came out and made this pronouncement that they were going to start having, as they had new blockchain companies launch and stuff like that, they were going to start recommending that they go the Duna route rather than the Cayman route and things like that, which the Cayman, the bev that Cayman goes pretty far beyond just the legal entity structure, because that goes into securities laws and things like that. But if folks are interested, this is a well-written blog, as everything Andreessen does. It's a well-written blog that gets into some of the details about how they're thinking about it and how they can kind of go into it. Sorry, Aldo, please continue, bud.
Yeah, no. So that's really I would say just sort of on that. Yeah, it could be competition for Cayman foundations, but I really think it boils down to the purpose of the DAO, and you'd probably end up with not having a one-size-fits-all type of structure. So I don't see in the immediate future that would be a significant sort of competitor to what is already existing in the foundation world. And then sort of looking at sort of the politics and the change in administration in the US, which is obviously critical and sort of, part and parcel of this discussion, does have sort of impact, is because of the uncertainty over recent years. Like, yes, there's definitely a change in tone from the new administration. But if I were a protocol or a foundation DAO looking to set up a structure, this may be sort of an inviting angle. But at the back of my mind, I would sort of ask myself the question, well, in 4 years' time, would things still be the same, or are we going back to where we were a few years back? So,
Yeah.
you'll have that backup plan. I think there's so much going on in this industry. There's more than enough for Cayman and the US to have a good chunk of these foundations and work with them.
How how have DAOs evolved from a structural or governance perspective over time? Like, I think we all were probably part of like the DAO or friends with benefits. I don't know. We all probably had like tangential touching of a DAO at some point. But like, is it still the same as, because 2018 summer DeFi was really like when DAOs made it big. Maybe 2017 was, I think, when the DAO was. Have the governance models changed? Are there better governance models or worse governance models? You mentioned like Tennessee having a quorum requirement for votes, which would be completely unmanageable in a true DAO environment.
Yeah.
What do you see in the governance model side?
Well, on the governance model side, I would say, on sort of if you look at sort of the on-chain sort of the voting side, you're looking at reputation models and sort of in general, I think governance has moved the needle quite significantly since 2017. That was really the wild, wild west, but there's definitely a big focus on these projects, specifically on governance. So, I mean, you could look at reputation-based models, as I would term it. And here I can think of examples like MakerDAO. So where you have voting power, but that's tied to reputation or contributions. So you get a bit of, you're ensuring active participation in driving decisions on where the project goes. It's not centered, voting is not centered with who holds the most tokens or, that sort of that perspective. You could also sort of look at multi-sig wallets, sort of more on the transparency side. And here I would say Aragon is a good example where you could have sort of a layer of multi-sig wallets combined with your public on-chain voting locks. So you provide a lot of control and visibility around that sort of governance mechanism and on-chain voting specifically. Or sort of hybrid model where you could sort of see an approach on more the DeFi DAO side, sort of a blend of on-chain governance with off-chain councils, looking at strategic sort of treasury management, just siloing the various governance functions outside of the voting mechanism. So, I'd say it really success hinges on having clear rules, having a clear roadmap in terms of governance and your project, and then looking at regular audits. And by regular audits, I'm not saying meaning sort of just external audits, like you've got your security audits, you've got internal controls, internal audits. And these may not be mandated, but it is a really good tool to have at your disposal. And then sort of, potentially real-time treasury dashboards, because oftentimes these foundations have rather large treasuries and can be quite complicated as they participate in DeFi themselves. So yeah, I'd say that's sort of on the governance side, what we've seen. And I think it may be another topic that we'll get to later on, but specific on the audit side as well, there's been an uptick on, even though specifically Cayman, there's not an actual mandate or a requirement to have an audit done. We have seen and had quite a number of discussions with these DAOs inquiring about actually having an audit, whether it's mandated or not.
So does that end up looking? I guess that ends up looking like a nonprofit audit in some ways, right? Because you're like you're not necessarily auditing for the same kind of stuff that you're auditing for in a traditional business. You're auditing for proper use of funds, which again, I mean, of course, you're doing that in a traditional audit, but like you're not necessarily auditing revenue and things like that. You're auditing use of funds. You're auditing the governance model to some extent. I mean, how I mean, auditing a DAO seems like a dicey proposition in some ways. Like it seems like it could be like really, really tough.
Yeah, it could. It is a big challenge. It's interesting. It's something new for, a lot of people that's been in sort of the profession for a very long time. It's challenging. So it's sort of, there's a little bit of brain power involved in it. You really need to think through a lot of things. You see something new every time. But you still, similar to traditional audits, there's a lot of focus around the treasury, right? And then how that's managed and,
Right.
what that numbers look like. But as you rightly pointed out, it's not one of the easiest audits you'll see. And typically your focus would be around, this is more sort of DeFi related, your usual suspects, like, how do you get comfortable over the rights and obligations on private wallets. So, as an example, we all know private wallet is typically just a long numerical wallet address. So David, if you say to me, well, I have this DAO and this wallet address is mine, like, should I just take your word for it? Or what do I do to
how do you
get
prove that?
comfortable over
Yeah.
that, right? And then there's various methods, it's a combination of procedures, and one of them is sort of looking at the private keys and really understanding who's in control of that private key.
Mm.
That's sort
Yeah.
of a key.
Do you end up, so if a DAO is ostensibly, so actually I've never thought about this. This is I love doing these webinars when I get to think through these things. Like, are all DAOs structured as nonprofits, or are some of them structured as revenue sharing LLPs, LLCs? Do you have like combination?
Yeah, no, there's definitely some of them that's structured as revenue sharing LLCs, LLPs. But you would also, the word under the DUNA that we spoke about just a little bit earlier, I almost want to say the word nonprofit is a bit misleading, because like
Yeah.
you cannot share profits per se via the DAO, but you could still pay somebody remuneration for services provided as long as it's reasonable.
Right, right.
Now the court will be the judge if it gets down to
Of
that. The court
reasonableness.
will be the judge on what was reasonable. But then if you have an on-chain governance function and voting mechanism, a lot of these sort of revenue generating contracts would be voted upon. So you'd have some mechanism to fall back on, I would say, even in a court, to say, well, I have a community
That made this decision
that
for
sort
it.
of made this
But
decision.
does that mean that you end up treating the treasury as you would an endowment? Because you're not building treasury. You're not managing your treasury as a function of earning yield and then dispersing it like you would in a fund that's set up like an LLP. You're managing it for the benefit of the organization, so it ends up being like an endowment almost.
Yeah, I would say yes and no, because to a large extent, I think, these foundations or DAOs, you really want to ensure you manage your treasury like, a traditional treasury, in the sense that you want to create yield, you want to grow the funds in your treasury to give you more runway, right? The more you grow your treasury, within reason, the longer your sort of runway is, or the more runway you have for the project. And this actually fits into another very interesting dynamic and sort of challenge for DAOs is, okay, how do I manage my treasury? Because you would expect a DAO to mostly hold their own tokens, right? That just gives like confidence in the project. Like,
Yeah.
why, as sort of the foundation, would you not want to do that? But we also know that this market is very volatile, right? And the swings can be severe. So you don't want to have all your eggs in one basket, because, like we've seen in 2017, 2018, drawdowns of 90%, that actually made some of these projects go bust. Like, they just
Yeah.
didn't have the funds. So in some way, you have to take some of your treasury and put that in a different basket, whether that's stables or sort of different tokens. But you run the risk of sort of sending a signal, because the blockchain wallets are very open and transparent. You're running the risk of sending a signal to the community that, hey, hang on, this project is dumping their own token, not a good sign. And then you may sort of end up, finding that your token gets dumped. So that's a really interesting dynamic that we've seen, and how to manage that. And you really have to
Super
secure your
interesting.
wallets.
Well, so Stephen, I want to bring you in here because I know at various parts of your career, you've looked at this from the other side. So Aldo is sort of the practitioner from the service provider side and audit side and things like that. You've looked at this from inside the organization. This is our first CPE poll right now, so please fill that in if you want CPE credits. Stephen, you looked at this from the practitioner side, from being inside the enterprise, and I know Facebook, I doubt you can talk about that, so don't feel obliged to talk about anything. But Facebook did a ton of work around how to structure DM. OpenSea, I believe, had some stuff, and I think Magic Eden also had some stuff around here. How do you do you have anything you want to add here that you're legally allowed to add
I mean,
about
yeah,
this from
I,
inside?
I would say I just really enjoyed just kind of hearing Aldo go into the depths of all the nuances of, managing and maintaining a DAO? I mean, I would say that you're totally right, Pat. On my side, you typically kind of see this division between the foundation and the labs co. And I think for me, as like a practitioner operator, I've always sort of been on the side of the labs co, making sure that we sort of understand the tokens that we have on our balance sheet, what's a liability for employees and insiders versus what's kind of set aside for incentives and whatnot. But hearing just sort of like the nuances of like actually just like running the DAO, like managing the token economics, understanding sort of what an action might mean for the rest of the community that's sort of looking at what's this foundation actually doing, what's this DAO doing, and how that sort of all then has a downstream impact to the underlying price, I would say, and confidence of the actual, token in itself. And so, yeah, I would say that I don't have too much to add other than it seems like there is just a wealth of just nuance in terms of how DAOs are run and managed. I'm sure Aldo can go on for hours in terms of how probably no one DAO is the same. I'm sure there's best practices in which you can glean. But I'd be really sort of, I'm curious to sort of know like how deep you can actually go within the overall realm of doing the finance and accounting for DAOs.
Yeah. Well, we got we got one question in that I actually I love this question because I have a funny relationship with controls because we have our SOC 1 and our SOC 2, and it was never something that I never got into software engineering to do SOC reports and controls and things like that. That might surprise you. That was never part. They didn't cover that in engineering school. Is controls language. But we got a question I think is actually super interesting, which is when you're auditing a DAO from a controls aspect, auditing a DAO from a controls aspect would be a challenge. Are there any standards on controls? I think that's a super interesting question. I don't even know. Do DAOs adopt control directives? I mean, I don't think there's never been a SOC 2 DAO, certified DAO. I doubt. I don't know how you'd even do it, but I mean, from an audit perspective, like, how do they actually think about controls? It's a really good question.
Yeah, no, it's a brilliant question, very
Yeah.
on topic. And I think it just feeds into the general sort of crypto space that yes, there are rules, there's accounting guidance, etc., but it's still not, there's still a lot of gray areas. So it's really looking at, comparing to what you would do on a typical SOC report, right? And take bits and pieces from that and see how that applies and how that is relevant to sort of the operations of a DAO, the treasury of a DAO. So per se, you won't necessarily see a SOC, SOC 1, SOC type 2 report on a DAO. But they are making use of whether it be through an internal audit function or a similar type of report, like under IFRS or international auditing standards, you've got the, ISAE 3402 report, which is similar to the SOC reports.
Huh.
But it's really just understanding like where is your key risks, where's your key challenges, and then understanding how you can sort of design and implement controls to ensure that you have comfort more from an internal perspective around all of that treasury management. You can share with the community, but you always have to be very mindful. There's a fine line between transparency and security, and obviously operational. I don't know
Really
if that answers
interesting.
the question. It's sort of there isn't any guidance, but you have to sort of follow your instincts, follow your experience, understand what you're looking at. And it could be very different for every sort of DAO. And then, take it
Well,
from
now
there.
I'm thinking about like what an audit committee looks like in a DAO, where you have like a pudgy penguin and an ape, and then a couple other people join to discuss audit controls for your process upcoming. Um, really interesting. Okay, so the first CPE question was, have you guys undergone has your organization undergone a financial audit involving on-chain assets or DAOs? I'm gonna have a talk with our marketing. I like the last one here. We are the conductors of audits. We are the dreamers of dreams. I'm not sure everyone would agree with that assessment in general, but I do like I like that we're brightening everyone's day, everyone's day here. Amazing. All right, that was super interesting. So I want to kind of change tack just a little bit right now, and Stephen, bring you in to get into this a little bit more. So we've been talking a lot about DAOs, and we're talking about the DAOs have their own set of like really interesting challenges. They have treasury management challenges. We'll probably come back at some point, Aldo. I want to come back and talk about some of the accounting guidance around DeFi for some of these guys, because that's it's super. DeFi is probably the one place that there is still a lot of like ambiguity around how you account for stuff. So we'll come back to it. But Stephen, Hey, tell us a little bit about like your role at Magic Eden, and tell us a little about like because when I think about you, you've got a lot of talent and skills. You do a lot of different stuff, but the places you've been, Magic Eden, OpenSea, you were leading a very complex rev rec. You're leading. There's a lot of complexity of what you do, but like one of the big parts is that rev rec for crypto companies at scale, at millions of transactions, can be really really complicated. Like it is just it's not simple. It's probably and the team you have to do it is lean and mean. I think would be a very generous way to describe it. So talk about like what you do on a daily basis and your responsibilities, and let's like start drilling into the rev rec component a little bit.
Yeah, thanks, Pat. You're complimenting me a ton, but I do agree that really it's a team effort, right? Like no one person can really do it on its own. And I'd say that the beautiful thing about working in working in blockchain is the fact that you do have this set of like immutable data. But at the end of the day, it's not always going to be audit ready, or your work papers aren't always going to be ready for someone to come in and review to understand sort of like how you arrived at the outputs. And so, in terms of just kind of like trying to frame how I could best answer your question, here at Magic Eden, I'm the head of finance. And so, I oversee our accounting team, I oversee our our strategic finance team. And then we have like another arm that just does a ton of your day-to-day financial operations. And I'm pretty sure for a lot of folks who are dialed in as well, if you're leading and running finance teams, it's probably not too much different. But I just imagine that if you're asking someone who's leading a finance team in crypto what you do on day to day, it just depends on like what day you're asking, it's like, what's today's problem, right? And so I think, just to be completely transparent, it's why this job is fun. It's because you aren't coming in and things haven't been built out and you're taking things from 0 to 1. Sometimes you're taking things from 1 to 0 and then having to rebuild it back to 0 to 1, right? And so it's kind of like the beauty of like, it's the nature of the beast, right? But when I think about my time in terms of how specifically kind of trying to address RevRec and what some of the core issues were, it's not like your typical kind of like ASC 606 sort of assessment because I guess to an extent there are because often.
There certainly are a couple of
Oh
those. Yeah,
yeah, I mean
yeah,
like you have
yeah.
to you have to ask yourself like the principal versus agent questions. You have to ask yourself like who your customers are, and oftentimes it's trying to understand what the smart contract means and who like where the fees are coming from. Is it split between the buyer and the seller? And so like we can kind of speak ad nauseum like with all these sort of like nuanced takes, but I would say that the one thing that sort of was a common denominator across both of my experiences here at Magic Eden and at OpenSea was just like the idea behind like fair value measurement. And I think one of the kind of key things there is that there's no one right way to apply fair value over the assets that you have on your balance sheet. But what you really need to do is to make sure that your policy is established, it's well understood, and that you're working kind of in lockstep with your auditors to understand, hey, is this kosher with your guys' understanding of how we're going to value this volatile underlying asset, right? Whether that be like a daily low or a monthly low or just like things like that. And this is particularly probably more relevant back when like everyone was impairing their assets on their balance sheet. It's kind of yet to sort of see how it's going to take a different spin now that you've got the new fair value guidance that's out there, and I'm sure everyone's trying to figure out how they're going to adopt it effective 1/1 of this year. But that being said, I would say like getting a really good handle around how the company is going to essentially interpret their native tokens on their balance sheet to a fair value of USD, I would say was one of the bigger challenges. And having sort of the underlying systems to ensure that your internal policy is reflected properly in the system was definitely something that was highly contested by our auditors.
And that's a place where you had to work close. So what was your I'm actually curious about this. What was your because auditors they'll give you guidance to some extent,
Mhm.
but I have to imagine if you come to them and say directly, um, like we're link token, we are going to treat as a security that's impaired, not fair valued. Will they answer that question for you, or will they say, okay, sounds good, we'll see how we think about that at audit time? Like what's the back and forth there?
My experience has been it's always been the latter. I don't think that auditors want to come to you and tell you what their opinions are. They oftentimes want to challenge how you, as the company, kind of derive what's showing up on your balance sheet. Why are you fair valuing this versus why are you not fair valuing it? And I think as long as you, and I think this is really important in terms of why finance leaders have to have a good pulse in terms of like understanding, what tokens are in their position, in their inventory, and apply that logic and really kind of do a thorough understanding and check of saying, hey, here's kind of the bar in terms of what we're going to consider to be something that should be fair valued. Everything else, whether or not it's a token that you generate, or maybe it's an airdrop that you received, or maybe it's a grant that you got from another, partner project. You really have to apply that rigor to sort of then understand what does your sort of like ending balance sheet look like at every reporting period, and make sure that your auditors, if you are being audited, are aligned with your approach.
What's been your general approach to that? Have you and feel free to bring an aspect of like cost control here too, because I mean, like you can bring in a big four and spend as much goddamn money as you want to spend. Like you could spend an unlimited amount of money on what we just talked about. Like not as the auditor, but as the advising side. How do you think about that as sort of that finance? Like will you tend to have your team write up a set of memos and then just bring in big four to do a quick review? Will you not involve with big four and then just keep a broader group out there? Like how do you think about like cost control and like going through this process basically?
Yeah, I mean, costs play a huge role in all this, right? But I would say that you then have to sort of understand. I mean, Pat, you've been in this business long enough, and I'm sure Aldo can speak to as well. But it's a trust business at the end of the day, right? Do you trust like the actual third party contractors that you're bringing in, or are you just kind of hoping that the brand name and the brand recognition is just going to be the one that's driving value, right? I think that there's so much talent, and I think given how new this space is, you find like pockets of just yeah, you find really good people at small firms, at ma pa shops, and folks who just have a really good understanding of how to kind of think and operationalize about crypto altogether. And so I think I've had the luxury of being in the space long enough where I've been able to kind of assemble like a handpicked team across both big four as well as like smaller shops to come up with a really, really sort of strong team of folks who understand the nuances of the accounting guidance, who understand the downstream impact of what the management also wants to understand and learn. Because you can go bananas with all the different sort of ways you can translate GAAP accounting and how that should then be reflected in the books. But how does management ultimately view it at the end of the day, right? If they're going to see these huge swings of unrealized gain and losses in your P&L, and you're just showing them like a GAAP P&L at the end of the day, is that really going to help them drive business decisions, right?
Run the business.
So you have to, as a finance leader, you have to understand what gets adjusted EBITDA out, what's for management purposes, but what do you then need to kind of how high of a bar are you going to hold to ensure that your books are being recorded in US GAAP or whatever your accounting guidance?
Gosh, I feel like I should know the answer to this question, but is there any crypto activity that you'd adjust out of EBITDA? Like you would like staking rewards, would you ever clump that into interest? Like is there anything like that ever does that from like the crypto activity aspect that
Yeah.
gets
Yeah, I think you have to, right? Because I mean, you don't want. So I'll give you an example, right? Like, how do you like if an Arbitrum, for example, were to give you a big grant, right? How would you recognize that in your books today, right?
yeah.
Do you bake it into revenue? Is it top line for you? Are you getting a ton of grants like this from other projects, or is it other income that can arguably be below the line, right?
Yeah.
And just depending on where you classify it, you can tell your investors that if it's all revenue, you can be giving off like wrong signals. Like, is it ordinary revenue that you're generating as a result of like your SaaS business, right? Or
Yeah.
is it a one-time grant? And how do you kind of, then reconcile that to understand the full story of like how Bitwave as a business runs or how Magic Eden runs as an actual operating co, right?
Yeah.
So there's just a lot of nuances, and I think particularly in crypto, there's so many different revenue streams that are so unique. So whether it's like staking revenue, whether
Right.
for us at Magic Eden, whether it's marketplace fees, right? We've just made the announcement of Slingshot, right? So now we have, revenue that we earn from fungibles, right? And swaps and things like that. So it just really all kind of depends on having a good pulse of how you make a buck, where you feel like,
Crypto is very unique in that way that there's a lot of ways. I think this is true across the board. There's a lot of ways that folks make money. Like it is even for us, like, yes, the enterprise SaaS is a big part of it, but there are a lot of other ways we make money. I mean, we run a bunch of nodes. So like we run validators on those nodes, and it's
yeah,
not part of our core business, but it's nice money because why would you not? Like you're already paying for the node, you already paid for an archive mode. Why would you not stake the 32 ETH to have it there? So it is. It's and like everyone kind of has all these different. Oh, then you have your ETH that you just want to stake to earn some rewards on it that way. So you do. It's crypto is a funny world where there's a ton of different ways you earn money and have to deal with it. So Stephen, I want to come back to more like deep dive into RevRec, but I want to take a brief interlude into talking about auditors because we've been talking a lot about auditors. And I want to talk a little bit about like, I think we had an experience the other day where one of our we know of a large L1 that basically was having trouble getting a Big Four auditor. And I think that's super interesting. Like, 5 years ago, no questions asked. Like in 2018, like Jesus Christ, no auditor want to touch with the 10-foot pole. Like this stuff's nuts. But like it's 2025 now. It's I think I could put this very like the regulatory climate has perhaps changed. The government guidance on this has changed. Like why are Big Four still maybe scared about auditing foundations or crypto companies?
Yeah, I mean, I have a take. I don't, and again, I'm sure everyone's entitled to sort of their own interpretation. I actually think that with the current regulatory environment, you're probably going to see people go a little bit more risk on, particularly in the US, right? And so if I'm an auditor, I probably would even put up my guard like more.
Even more. Yeah.
Just because I think what this current regulatory environment is opening up is, hey, if the US wants to be a hub for crypto innovation, it probably means that you're going to see a lot more of like diverse products and offerings. You're probably going to see more like, tokens kind of spin
Yeah.
up from companies that otherwise like would not have really contemplated it. And I would say that in general, that probably gives, I would say, Big Four, just Big Four auditors, just a little bit more pause in terms of, hey,
Ton of heartburn. Oh
yeah,
yeah. Ton of
is
heartburn.
is the juice worth the squeeze? Is
Yeah.
like do the risks outweigh the rewards? But I would love to maybe even like pass this question off to Aldo, being on the other side of the house, and sort of get his 2 cents in terms of the landscape right now.
Yeah, sure. All very interesting. Stephen, you may want to consider to come back into the profession from the responses and some of the detail you've given. It's really a great summary on the revenue. On this specific question, need to tread carefully. So I'd say I wouldn't necessarily tie this down to the Big Four. I'd say this is more a broad sort of general question. And the
Hmm.
way I see it is it's a bit of a, if I can use the word battle between finding or attracting the right talent, and then also the strategy of the firm, like the audit firm,
Hmm.
in getting familiar with the ecosystem. So, on strategy, what I really mean by that is, do you as a firm want to just dive straight into DeFi, external audit, or do you want to take a different approach? And I suspect this may be sort of with the Big Four, the approach that they are taking is, do you focus on SOC type audits, controls, getting an understanding, sort of getting that front row seat, understanding all the nuances while you sort of assisting with internal audits, audit readiness, etc., building your skills and capabilities. And then at a later time, when you feel the time is right, you have the skill set, you have the talent pool, and you can kind of just sort of converge to the next layer. That's sort of one sort of thought that comes up. The other point, or the other consideration I would say is also around you know if you think about traditional sort of in the profession, generally consulting, etc., it's like you've got various sectors. So you've got asset management, you've got banking and capital markets, you've got oil and gas, retail, telecoms, etc., right? And you've got sort of specialized skills in those pockets and people focusing on that. Once you get into blockchain, it requires a unique skill set, obviously, people that have interest in it, but you're not narrowed down to, okay, it's the blockchain industry. We basically cover all of these industries. So you'll have DeFi. That's different to a fund that's investing in pure liquid, tokens, having all their assets on an exchange versus for foundations, the DAOs, which is more DeFi. And it may just be a strategic decision to say, look, we've got more than enough, given the talent pool that's limited, to keep ourselves busy with the exchanges, the custodians that we focused on, that we just don't want to sort of move into that space. So yeah, I think there's like a number of things, and it's probably again, we'll probably cover this a little bit later on if time permitted, but it also boils down to in DeFi, the question or the challenge around where do you get your data from? Can you rely on that data? Is it accurate? Is it complete? And you really have one of two options, either use a service provider or build your own tool. With both, you need to kind of consider the same steps to get you to a good spot.
Yeah, yeah. Yeah. So Stephen, the one of the things I want to ask you one last question, and then I want to get into the tech stack a little bit here. By the way, poll question now for everyone that needs to do your CPE poll. Please answer it. Yeah, so it's funny. The poll question is exactly what I wanted to ask you, Stephen, about, which is, Stephen, I think you are uniquely positioned because of what Magic Eden does and now Slingshot around cross-chain L1, L2 capabilities. Really, I'd love to hear your take as kind of a finance practitioner, as a head of finance, how the landscape is shaking out. I know this webinar is sponsored by Arbitrum, who's obviously like they have their particular take on all this stuff. But I'd love to kind of hear your take on how you think about the L1, L2 markets are shaking out. And maybe a way to kind of couch this or to start the conversation is like, I think ETH has been getting beat up a lot, like real late. Like you follow crypto Twitter, which I do my goddamn hardest not to because it's kind of a cesspool. But you follow crypto Twitter, and man, people are just bagging on ETH. Like everyone's pissed off at ETH these days. Everyone wants to be going up. Everyone wants to be doing better. So that's a great place to start. It was like, how do you see the different L1s out there? How do you see the L2s? How's the shaking out? How do you think of it from a finance perspective?
Yeah, it's a super spicy question, Pat,
I
right?
see.
Yeah,
It's
it's
good to
you.
hear.
Because I mean, and I really kind of allude this to just the way perhaps like we kind of internalize it here at Magic Eden. I mean, I would say that there's obviously like a consumer-facing approach here, where as a consumer, if I'm using consumer product, like having to think about all these different chains is actually quite it's quite like cumbersome, right? Like, if you are if, like, let's just say for whatever reason you buy Bitcoin, but you want to all of a sudden start trading like Solana, the different hoops you have to go through in order to like swap, bridge, like, and just like how complex that overall sort of like end-to-end process is. It almost sort of like, I would say, like detracts people from wanting to like come into this space, right?
Oh, 100%.
Um,
100%
but
is a barrier to entry. The
yeah,
complexity around this is a
no,
barrier.
right. But if you take it from the lens of the actual builders, of folks that are building L1s and L2s, like it's like, for me, like being someone in crypto, like I love it because everyone kind of has their own sort of spicy take and has like this idea that, hey, I think my like the way that this chain's going to run is better than, this other L2 that's in the same space. And I think what that just naturally drives is just this like underlying competition. And I think we saw a lot of that, I would say, just like with base coming out. You can kind of see that with, Arbitrum and like Avalanche, and like there's like OP. There's so many different like L2s that are coming up. And I think what it does is that it really just gives flexibility to the users who are probably a bit more crypto native to make that actual judgment and the call for themselves, right? Hey, like I want to build my product on this chain specifically because it's faster, it's cheaper. And that's really the knock on ETH, right? It's just really kind of expensive and clunky to do things on ETH. Well, I say expensive and clunky, and then you've got like Uncle Bitcoin over here where you can't really do it.
I mean,
But
making like doing a payment on ETH is a buck. Like that's like because
yeah,
we just launched our payment stuff. Like it's ETH is going to be a buck to do the transaction. Bitcoin is going to be more than that. Base is going to be a penny. Solana is going to be a tenth of a penny. Like that's the back of the napkin.
exactly. So, I mean, and that's exactly right, Pat. That's exactly it right there. So, I think there's kind of this interesting dynamic that I would say as a practitioner, for us, our product serves the consumer. So obviously our PMs, our designers, they're all kind of focused on how to make this as easy for the actual customer at the end of the day. On the back end, then you have to have engineers who sort of deeply understand how these chains are actually running, how we then can consolidate them and ensure that it's just like the most seamless process for the end user, which to us at the end of the day is the consumer. And so like it's a different mindset because you have a bunch of engineers who probably aren't as attuned to what the consumer might feel at the end of the day. Well, actually, I lied because our engineers are all very like, I would say like they use the product itself, so they understand like what the end goal is. But I would say for the consumer, we're trying to build this like chain agnostic sort of experience, right? So whether you're buying something on Solana or Bitcoin, or if it's an EVM chain, it all kind of feels the same. But then we have to sort of be that sort of in between the actual like chains themselves to then understand how it runs and how we can sort of, interpret all the data that's going on in these blockchains.
Aldo, anything to add on your from the audit side? I mean, that was a great answer. That nailed it, but
Yeah, no, it pretty much nailed that one down. Not really much to add.
well, I think it segues very nicely into talking a little about the tech stack here, which is to say, like as you're starting to think about your tech stack all around this. I mean, although let's start with DeFi as a really good one. So Bitwave, we have DeFi support, but I mean, at the end of the day, DeFi is hard. Like there's just no two ways around it. Like you're saying, hey, I want to have a software package that supports every crackpot idea that anyone's ever had on chain over the last like 5 years and every crazy ass thing that they can possibly do. It's just a tricky proposition there. How do you think about DeFi? How do you think about getting all that data together? How do you think about building up a stack for folks to kind of use there?
Yeah, I would say I think that's one of the biggest challenges we face in general, right? Is DeFi, the complexity is layered around multiple different blockchains, um, cross-chain activity, et cetera, et cetera. So from our perspective, it really boils down to one of two options. Is like you either look towards a service provider like a data aggregator where you get your data from, or you just sort of take it under the hood, you build your own proprietary sort of software to get there. Probably more labor intensive, time consuming, but the end product is you have a product that you have more control of and you actually have in-house expertise. Whereas if you go external, the effort is different but similar. And what I mean by that is you really need to understand if you use a data aggregator or service provider, is really where does that data come from? Where do they sort of derive their data from? Meaning, do they run it from a node? So do they actually run their own nodes? And how does that sort of whole process between extracting the archaic data on chain, getting that in a data lake or something similar, the indexing, right up to the point where it's actually something that's a meaningful format for us or, Stephen and his team to use. And the sort of the canary in the coal mine around all of this is, well, getting from point A to point B from really archaic data to here's something you could potentially work with. Did anything get lost in between? Right? That's the challenge, right? And you have it's time consuming, like I said, labor intensive. You've got to look at ways of saying, okay, well, do I spin up my own nodes? As a check for that, did anything get lost? Do I actually sort of make calls to other nodes, sort of a second and a third node, just to compare the data to say, okay, well, I'm looking at the same set. You can run queries to the node to ensure that your node, you need to make sure your node is sort of up to date. And what I mean by that is you're not behind, it's synced with the rest of the network, you haven't missed a chain split or a fork or something like that, and you could be looking at completely irrelevant data or sort of out of date data. Another sort of mechanism or tool you can use is sort of a comparison to multiple explorers, go to Ethereum, or if you're on Solana. And I'll sort of recommend to you to cross-check to at least 2 or 3 of them, not just one. I mean, our devs internally has found sort of issues and inaccuracies on ETH Explorer. So for the folks just using
Every
explorers,
explorer, I mean, every explorer has issues.
yeah,
It's a very deep fact of life. Is they're
yes,
pretty good, but like there's just a bunch of weird stuff that happens out there. Like WETH is probably the best example. It's like WETH is a great example where it was built first, but it was built non-standard. And so WETH has been this really nasty that like a lot of explorers, even as you get to L2s and stuff, like don't actually treat it correctly. You have to add special custom code to pick up WETH minting correctly. So you always have that kind of issue there. Well, although in 1 minute, because I want to give the rest of the time to Stephen here. In 1 minute, um, what are you seeing for DeFi treatments, for DeFi accounting treatments? Like today, if I go into a Uniswap pool, what percent of your customers are treating that as a separate account that's holding two distinct assets? So my WETH and my USDC that's in that pool. What percent of your customers are treating that token you get back as the primary asset and doing it as a trade? Or is that not even a good question anymore? I don't know.
No, no, it's a very good and relevant question, and it's sort of a very gray area with no consistency, across the spectrum. You kind of get to the same answer, but where you put two assets in a pool, the question is always, well, do I de-recognize the two assets and recognize the LP token that I get, or do I continue to recognize the two individual assets? Obviously, there will be footnote disclosures in the financial statements sort of describing all of that. And I would draw this back to Stephen's earlier comment about you have to make sure that you have proper policies in place, right? That's sort of your backup on supporting what you do, whichever route. We've seen both, and you
Is
can't
is
be
one
wrong
is one
either.
winning in the market? Is one done more? Or is it about 50-50?
I would say it's about 50-50. I would just say for us, probably less relevant than when you're onshore. There may very well be tax considerations
Yeah,
around the
yeah,
different treatment, right? Because if you go de-recognize the two assets into an LP token, you most likely have a realization event that could have some tax implications. So, I'm of the view personally that with the two individual assets, if somebody can point me to where you meet the derecognition criteria per se in the standards, that would be the thing
that's
for
how
me.
you. Yeah,
From an audit file, when I'm in the audit, you need to get me comfortable with that perspective.
yeah,
But you kind of end up with the same measurement, the same
yeah.
value on your balance sheet.
Yeah.
But yeah,
But
it's very
per-
nuanced.
perfect. So Stephen, bring us home here, buddy. So Stephen, the thing I want to talk to you about, because something that we've done with both Magic Eden and OpenSea is scale, right? This idea of, I remember the very first OpenSea audit we ever went through. We handed an auditor a CSV that was probably 10 gigs large. I shudder to think the amount that they charged you guys to audit that. Like I just can't even imagine what they charge you to go through that. How is your thinking about because so one of the things that we do with like Magic is we have both kind of like individual transaction recognition, but then also roll ups. And if you have a bunch of revenue over the course of a day, we can help you roll that up and just sort of recognize it once a day. Has your thinking about this changed? Have auditors changed how they approach auditing your hundreds of millions of transactions yearly that we're dealing with? How's that evolved?
Yeah, no, and this is where I get to, I guess, shill Bitwave a little bit here. But I would say, when I think about my tech stack and how we were able to successfully, pass an audit with no material weaknesses, that just really boiled down to having like a solid implementation of whatever tool that is that you use. And so, with our facts and circumstances, we partnered really closely with Bitwave, built out the roll-up logic, built out the fair value logic, had a really good understanding in terms of how we were able to essentially associate value to the ending balances of all the different sort of wallets that were within the company's possession. And so I think by having a tool that can scale with whatever your business is, that I would say is just a key recipe to succeeding in the space. Or if you're looking to pass an audit, that's definitely one thing you want to do. And I would honestly even say that even if you aren't being audited right now,
Get ready.
just get ready. Yeah. I mean, if you are building a business that's wanting to scale, you don't want to be spending your month end trying to remember what happened at the beginning of the month. Because if folks who are operators like me can probably attest to the fact that like there's so much that happens throughout like just with even like 30 days in the space. The last thing you want to do is trying to spend like oftentimes you're ending up trying to moonlight closing your books. And so just invest up front, like how to classify transactions, being really thoughtful with your wallets, right? Creating sort of like a good wallet logic such that as funds flow in, you can easily designate that, hey, this is a revenue or this is a fee wallet. If it transfers to another one, right? If you have tools like Bitwave, it can automatically kind of capture these are internal transfers. And as they go out, you already kind of know that those are expenses or those can be sort of like trades. And so just the more time you invest up front, you're just going to save yourself way, way, you're going to save yourself a lot of headaches down the line. So.
Yeah, and has the way that so yes, I agree, and thank you for the shill. I appreciate it, brother. Has the way that they sample test your auditors like has that matured? Because I mean, I remember the first year. I think I'm not sure they even sampled. I think that they tried to I think they tried to do a full back into the revenue.
They,
I think they took the raw data and tried to back into revenue numbers.
yep,
Have
yep.
they?
Yeah,
Go
I
ahead.
will say that if your revenue is coming from on-chain data, auditors will likely rerun the actual transactions themselves because it's been that sophisticated. Sorry, the technology is that sophisticated now, where you can run scripts if auditors will have nodes. And I don't know if I'm able to share this, but we got 100% of our revenue tested, right?
Wow.
In the years we were audited. Yeah.
Is that a brag or is that like a self-own for paying for 100% of revenue? Like I'm genuinely curious. Like as a like
I think it's both, right? I mean, I've
yeah.
been in space now for like over 15 years, and
Yeah.
I've been an auditor myself in my early days, and I've been an operator. You don't see auditors testing 100% revenue.
No, like that's like unheard of. Like, could you imagine Walmart having 100% of their revenue tested? That'd be unheard of.
Yep, you can't. So the fact that you can do that on chain now, it's pretty remarkable.
That's super interesting. I love it. Well, you guys, Aldo, Stephen, thank you so much. This was absolutely spectacular. This is so much fun. You guys are both incredibly knowledgeable about this. I learned some stuff, which I love when I get to learn stuff on these webinars. Thank you very much for joining. And I'll do the quick pitches. If you want to find out more about Bitwave for either payments or crypto accounting, bitwave.io. Aldo, you want to do a quick pitch for RSM?
Yeah, if you want to find out more about any audit needs or you're struggling in the DeFi world, feel free to reach out to us at RSM Cayman.
And Steven, tell us where we can go by not just NFTs anymore, but now fungibles.
Yeah, go ahead and you can go to magiceden.io or .us depending on where you live, and then if you want to go buy some meme coins and fungibles, go download the Slingshot app. Good to go.
You gotta get your meme coins, guys. It's
Yeah.
gotta get your meme coins. Thank you so much, everybody. CPEs will be going out over the next couple weeks, something like that. I really appreciate everyone's time, energy, effort. Thank you so much. Have a wonderful Thursday afternoon.